You're listening to the Ottawa Real Estate Podcast, brought to you by Referral Mortgages and Blue Panda Realty, with your hosts, Paul Stevenson, David Warren, and Greg Campbell. Let's see what's going on in the world of real estate in our nation's capital.
Ooh. We're back. The Ottawa Real Estate Podcast. We're mugged up.
Let's get it.
The feet up. Let's go.
Get yours today.
My name's Paul Stevenson. I'm here with David Warren and Gregory Campbell. And it's Friday. We're having a good day. I am one of the proud owners of Referral Mortgages here in Ottawa. I'm a mortgage agent. And David Warren is my business partner, also a mortgage agent. And we're here with Gregory Campbell today. He is a partner at Blue Panda. Gentlemen, how is the week? How are we doing?
Amazing.
Fantastic.
Amazing.
Great.
Well, I'm a little
He needs that North Brew coffee this morning. Don't forget to use your promo code podcast.
Yeah. No, pretty happy about the new mugs. Turned out really well, actually. We got our friends over at Printwell. Correct. Mm-hmm. Before I start bigging them up here, friends over at Printwell did our mugs. They're looking nice. We got North Brew as a partner. Briefly, we'll just mention that. So anyone who's watching, you want to get some coffee for the weekend, for next weekend probably, they'll drop it off. No delivery charge.
Get your discount code. Just type in podcast and get your 20% off. Thanks to us.
So, gents, last week was a wild episode. You know, we were talking about some of the stuff going on in the market, some of the stuff that you've been seeing, Greg, as far as double ending and some of that chaos. And we got some very interesting feedback and comments and people interacting with the video last week on YouTube. It's clearly not an anomaly. You know, it seems to be happening quite frequently. And I just, you know, we'll bring it up and we'll go over the comment. But I think it's worth noting that, you know, in any industry, there's going to be outliers and there's going to be things that happen that are, you know, unethical and so on. But that's with every industry, right? I mean, that's not everyone. And I don't want people to be nervous about getting into the, you know, home buying process or anything because of these stories. But you know, the stuff always comes out. And should I read this out?
Go ahead.
Yeah.
So.
Yeah,
No, go ahead, David. What were you going to say?
No, go for it. I was just going to say that, you know, this gentleman that posted, he, you know, first time home buyer, which is especially, you know, upsetting, I guess, if you will, on that he's gone through this experience. But anyways, go for it, Paul. Read it through.
So it says, same tactics seem to be used by agents in Ontario and Quebec. It says, the Ontario agent I was dealing with intentionally submitted my bid late as he was upset I was not increasing my offer by at least $50,000 above asking. He claimed there were many bidders. In the end, it was just one other offer which won and an offer amount just $5,000 above asking. Disappointed as I could have only afforded $10,000 above asking, and I could have won. The second scenario was months later with a Quebec agent who told me decisively on the phone that he would not represent me unless I offered at least $40,000 above asking because there were allegedly 20 other bids received. He then said he'll give me a call back after speaking with the selling agent. He called me back and it was high pressure as he claimed he had appointments so he needed to submit my offer 2 hours in advance of the deadline. I nervously said, okay. Literally half an hour later, I got a call saying the offer was accepted. I felt rushed and rattled as the guy was a bully. I felt something was very wrong and walked away. The guy left a voicemail threatening to sue me. My mortgage broker actually said that what I experienced was unacceptable. I'm so turned off as a first-time home buyer, as this occurred in 2019 and 2020, and now prices are truly bonkers.
That's a horrible
end
story.
End quote. Yeah.
That's a horrible experience. Like, why would you ever want to work with any realtor after that?
I think that goes though to number one, easy solution, call Mr. Gregory Campbell, you know, ethics through the roof. But truly, you know, I think and I know Greg, you say it all the time, of interview who you're going to work with. Interview of, you know, I've heard you say it before to clients and on this, you know, interview 2-3 realtors to get a feel of whether you get along with them, what their ethics are like, their approach to business. And I think that's vitally important. And, you know, unfortunately, this gentleman had two situations that were extremely unfortunate. It's really a shame to hear.
These guys, these agents that are doing this are going to be left in the dust when things change. Like, I don't know what they're going to do, because they're not going to have people who are going to be ready to even, like, clearly there's people that they're pressuring into doing that and it's working for them, which is terrible. And then, what do they do when the market changes and people aren't throwing money around like that?
I think it also speaks to working with realtors, a professional that does this day in and day out, and not somebody that's doing 1 to 5 transactions a year that is desperate for that business, because those are the people that are going to cut corners, that are going to pressure you. And that pressure comes from them being in a fully commissioned business that are desperate for that income. And I feel that, and on the brokering side, we have part-time mortgage agents that there's a lot of banks and brokerages that won't take them on, because they're, those people that aren't doing volume or doing it part-time are the ones that are cutting corners or doing something, that are more prone to fraudulent documents or things like that. So I think that kind of goes to interviewing who you're working with and working with somebody that does this on a full-time basis and at a proper level.
I agree. Sorry, I almost died there. Oh, shit. You guys still hear me okay?
Yep.
That just coffee just went down the wrong way. I mean, what can I say?
Wondering what happened to you.
Greg, just to, this is something we kind of something we touched on before getting on air. I'm just off the rails right now. Something touched on before going on air. I just wanted to, we've been hearing a lot of questions from clients recently, just asking us about agents and literally exactly that, like efficacy. Should we be working with an agent? Should we be looking on our own? I think there's a lot of misconceptions too, that first-time buyers think that they're going to be paying you an absorbent fee just to actually work with you. So I feel like it might be worthwhile just, from a very high level, like just starting from the beginning, like what is the difference between a buying and selling realtor, and what does the process look like for you? Like if client says, hey, we're a little nervous, we're thinking about getting into the market, like what's kind of that conversation look like, and what's like, how do you start them down that road, as opposed to these other leeches of the market,
Well, I mean, the step for me is, I kind of guide them through the process of how it works. Whenever I meet somebody, they're a first time, or what I do is I first off take all the agreements that they'll have to sign, whether immediately or eventually. And we have all the legalese in regular kind of human terms. So I send it to all the buyers or the sellers if they're new to it, and I make sure that they review it. Although of course they don't do it immediately. They usually wait until you see a few properties, and then they say, "What's the next step?" And I say, "Well, did you read the documents?" And they're like, "No." And I'm like, "Okay." I'm like, "We're gonna go over it." I'm like, "But read the documents." Alternatively, sometimes depending on who it is and their capacity for fear or whatever or knowledge, I'll have what my colleague Nick Crouch will call a buyer intake call, and you'll go over the documents step by step on that first call, so that by the time they're ready to go, like they know exactly what they're getting into. Same thing on the seller side. I always talk about, backtrack a bit here, into your comment about, double ending or representation. If I have a house for sale, I will never agree to work with anyone coming in to buy it that calls me directly. I'll refer them to a colleague. And we're definitely we don't do any commission reductions or anything like that. It's straight off. Like if I have a property for sale, I have one coming up now. And I explained this to the sellers the other day. If anyone calls me directly and they say they want to work with me, they don't work with buyer agents. I say, well, then you're going to have to find a buyer agent, because I will not work with you ethically. I don't do that. Usually that it sorts it out pretty quick. I'll refer them to a colleague if they don't have someone else that they want to work with. And on the buying side, if anyone asks about paying, I always tell them, I say, no, you guys, you're good to go. The seller will pay me out of the total commission sale of the house. And, I think a lot of buyers know that at this point with all the information that's out there. But, and with the buyers, I say, when they want to go shopping, I'm like, absolutely not until you talk to a broker. If you want to talk to one of my guys, great. you have somebody else, get in touch with them. And once you're approved, give me their contact and I'll talk to them personally so that I know. I don't move until somebody's pre-approved, and
yeah, I know we've talked about this on the show before. I just want to touch on that double ending because I think, people probably don't know. And I would assume like we're in the industry. So obviously we talk about this day in and day out. But I think the general public, if you're listing your home or if you're buying, you don't understand what the obligations are of that real estate agent that's representing the sellers, right? So if you see a home that you like and you call the real estate agent that's listed on that listing, if you're on realtor.ca and you're just browsing and you see a home you like and you call the realtor that's listed there, their obligation is to represent the best interest of the sellers. So they can, what's the term, Greg? Advise you? Or there's like a term.
Yeah. Like, so if at one point in time, I would work with that and you'd sign what's called a customer service agreement as opposed to a representation agreement. Mm-hmm. So if I have a seller representation agreement, it means like I have the property for sale. Someone would come in and they would want to offer on the home, you go through the steps and they really want to do that with you. You sign a customer service agreement, which just is an agreement stating that you will do what they tell you to do and nothing more than that. You will say the house is listed at this price. I'll submit the offer for you. What would you like to submit it at? And that's the end of it. And then, my obligations to the seller. So, but I don't even go there because, I don't like doing it because, in the past I found I had a couple scenarios where even though in the end it worked out, I felt that the sellers were still not as comfortable as they would have been if someone else was representing the buyer. So that's why I don't do it anymore.
And I know Greg, or Dave, you mentioned this last week that when that does happen, like when a property is double ended by a realtor, it automatically triggers that appraisal, right? Which is and we actually had an appraiser on this week on our team call. We have, our team has grown obviously a fair amount this year, and we like to every Thursday we have either a lender or someone in the industry kind of come on and speak to the team about, what's happening and just so everyone has a finger on the pulse. And we had an appraiser in this week, and he had some very interesting kind of insights as to what's happening in the market and how they're having to appraise properties and so on. And he was actually saying, which Greg, this might be of interest to you. He was saying that the amount of rooms in the house is actually not a top priority. He said the main thing is square footage. What was the order, David? Square footage, land size, lot size.
Yeah. And actually finished basements over unfinished and finished basement over rooms even, or bathrooms. The reason for that he explained, which I thought was interesting because as far as I knew it, or believed, was that, room count and bathroom count mattered, to his explanation that finishing a basement is that much more costly to finish a basement and adds true square footage to the home, whereas bath or bedrooms are inexpensive to add if you're just adding a wall or a bathroom. So that I thought was insightful and interesting. On the flip side, the funny part is he was saying that for your insurance company, that's the last thing they want to see is a finished basement, because that's where 80. He was saying 80% of the insurance claims are based on sewer backups or flooding or anything of that nature. But as well for landscaping, he was commenting for those out there that are buying based on gorgeous backyard and pool and outdoor kitchen and whatnot. Those are all fantastic, and those are something that you can really enjoy with your family and get a lot of use out of and host friends and family and whatnot. But to the banks, they're actually just a liability. If you neglect a pool for one single season, that pool is shot, and costs a lot of money if the bank has to take over that property that they now need to rehab a pool or they need to fill it in. Same being for an outdoor kitchen or something like that, which is great from a buyer's want standpoint, but for the bank, it's actually just a costly liability on their books, just from a maintenance standpoint, because banks always look at what the value of the home is today and you closing on it. But all they care about is you close today, June 4th rather. If you default on your mortgage today and they have to take it over the 5th, what is the cost of that property going to be? What are they, is it marketable? Can they put it back on the market and cover their costs? How much in the hole are they going to be? Things like that. And so pools kind of play into that and other aspects.
Yeah.
If you have anything to add, Paul.
Yeah. Well, he also, the thing that he mentioned that was of interest to me too is that like he was talking about bedrooms. Like if you're going to sell your home, if you have 4 bedrooms, for example, the right buyer is going to pay more for that. But that doesn't necessarily mean that the home itself is more in value than someone who has the same square footage with maybe 3 bedrooms instead of 4. You know, it's really that right buyer is going to pay a bit more for that than someone who only wants 3, but it doesn't actually increase the actual value of that property. The other thing he mentioned is that, and we kind of talked about this, Greg, with the builder lots, is that, you know, a lot of people have this misconception that if they have an end unit or a pie-shaped lot or something like that, that these are huge advantages. And he said oftentimes, as an appraiser, they look at that and, you know, it really is dependent on the buyer again. You know, you might get an end unit and people think that's excellent, but it's also noisier. It's, you know, if you don't have a fence, it's riskier. If you have children, like there's a lot of factors in there that it's still very specific to the buyer that's looking to buy that home that may pay a bit more, but the actual appraised value is not going to come in that maybe what you think it is. It might even be less than someone who has a middle unit, you know, who has a finished basement or what have you. So there's just a lot of, I think, misconceptions out there of what creates value in the home. And Sarah commented on this here, but the 4 main things were lot size, square footage, finishing. So finishings in the home, and then the actual condition of the home itself. And he actually said specifically, like, you know, if you have a beautiful, you know, brick and mortar home in 75 years, it's still going to be there. Whereas a pool, as Dave said, you let it go for 1 or 2 seasons, your landscaping just went from 200,000 to 0, you know? So it's actually a make work project now. Mm-hmm. So those are the sorts of things that, you know, there's kind of the understanding misunderstanding that those sorts of things are really going to boost the value of the home. And we've been seeing it recently over the last year and a half that people have been dumping money into their landscaping and into their properties, but just making sure that you're putting that money in, like investing that money into the right areas, right? Unless you're doing it for your own personal, as Dave said, like if you're looking to have that beautiful backyard to entertain, and this is your, you know, the home you're going to be in for the next few years, then by all means. But if you're doing it to increase the value, it's definitely, you know, you want to be doing the proper research and maybe even speak to an appraiser in advance to see how that's going to affect the future value of your property.
And it affects the value in the sense of street value. So what, you know, a particular buyer that is interested in that property or loves the landscaping is going to be willing to pay because it's right for them. They were looking for a pool. They want that beautiful landscape and they're willing to pay more for the property. But from an appraised value or the way the banks look at it, it's not necessarily adding, you know, actual value, if you will. So there's the 2 aspects to it. But I want to kind of digress back to, you know, Greg's comments about on the realtor side, and I know you kind of mentioned that a lot of people are aware of you know, realtors' costs or commissions being covered by the sellers, and I think, you know, I know Paul and I have been doing a number of first-time homebuyer webinars, and a lot of them aren't aware still that the cost to a buyer, whether you're a first-time home buyer, whether you're a repeat buyer, there's no cost to you for a realtor service as a buyer. They're compensated by the sellers or for a mortgage broker. So when dealing with a mortgage professional, we're compensated by the banks. There's no cost to you. You know, we're compensated by the banks, and it's pretty well, you know, uniformly across the board. We always say that we you know, work with over 30 different banks as mortgage professionals, but we're compensated pretty well uniformly across the board. We're advocates for you and to walk you through the process, to work with Greg, work with your lawyer to make it a seamless process. We focus on mortgages day in and day out, and we act in your best interest. We want to know what your goals are, your plans with your family, with the property, so we can also ensure that what you're getting into as a mortgage product is best suited for you and the growth of your family. So you're not getting saddled with surprise penalties when you go to, you know, because you're a first-time home buyer and you're thinking about maybe having your first child in the next 2 years, and maybe you're in a 1-bedroom condo. Well, maybe you're going to want to grow to that. So we want to make sure that, you know, what you're getting into, the penalties are, you know, be minimized, or that you're going to have that flexibility to move that mortgage, things like that. So these are conversations we have as mortgage professionals. And I truly believe that, you know, the bulk of have these conversations. You're not necessarily going to have these with the bank. The bank is just going to ask you what your income is. Here you go, away you go, because they don't have other offerings or have other banks that they can compare to for those different options. So,
and the bank, like, even, you know, coming from a bank background myself, which, you know, some of our listeners may or may not know, but I worked at a major a major bank for about 8 years. And I was doing a lot of these, and they were called rate holds. And essentially, you would just verbally say, I make, my wife and I make $80,000, and we have a $300 car loan, and that's it, and then they basically just throw that stuff in the system, and it spits out a piece of paper that states, well, you're pre-approved up to 450,000, and we'll lock in a rate for you even for 120 days. And then they go out with Greg with that piece of paper and start putting offers on homes. And it's like, it's like an insurance policy that's not underwritten up front. You're getting this great coverage, but when it comes time for brass tacks, you don't actually have what you think you do. So, when we assess a client's file, we're actually looking at their credit, we're looking at their income, we're looking at their down payment, we're looking at the full package as if they're buying a home today. And that actually gives them something that's reliable to go out and start shopping, so it's a different process. And we oftentimes see clients that have been to the bank and have that rate hold that come to us afterwards, either through yourself, Greg, or others in the industry, that say, we were pre-approved at 500 and we went back to the bank and, we hadn't mentioned my student loan or what have you. And now their pre-approval has dropped substantially and they need to, be creative. And obviously, we work with 30 different lenders. So we have lenders that are willing to accept, higher kind of debt ratios and things like that at times. So, we have solutions for most of those cases. But it's something that the banks, as Dave mentioned, as specialists, we deal with this day in and day out. And when I was at the bank, I was very much a generalist. I was doing checking accounts, investments, lines of credit, everything, like you're doing 20 different things in a day. We do one thing, we're kind of a one trick pony, but not, we got lots of ponies in a stable, but they're all the same, So it's just, it's a different approach.
I want to use one example of, to your point, Paul, of pulling credit. Cause when we do a lot of these first time homebuyer webinars or talk to a lot of clients, they ask if we're going to pull their credit or, worried about it. We absolutely need to check your credit because it not only is, you might look on Borrowell or Credit Karma and say, oh, I have a 700. That's looking at a 6 and a 12 month history, a very recent history, but it's not looking at since you ever first got your very first credit card when you were 18. And so we're actually seeing that full history and looking at that entire repayment history, which shows you a different scoring. But so it's a much different look at credit. But to Paul's point of, going to a bank and student loan comes up, they never mentioned or what have you. I have clients right now that, they, in their eyes, first time home buyers, going through the pre-approval process, checking credit, the boyfriend had actually co-signed for the mother on her property and wasn't aware or didn't even realize, and it didn't even clue in that this would be on his bureau, that this would count as a property that he'd owned, or that he was not any longer a first-time home buyer, and that we had to incorporate all of those payments, 100% of those payments, into his qualifying ratios, which then led to him not getting the first-time home buyer, land transfer tax rebate and credit and all that, but also it meant we had to be very creative on his application to qualify for their mortgage because of this other property. It never occurred to him. And it happens a lot with parents as well. They've co-signed on student loans for their kids, student line of credit that they forget about because it was signed 15 years ago or 10 years ago. They don't realize that it shows up on their bureau, or they co-signed on one of their kids' mortgages, things like that. And so by checking credit, there's a lot of times that people forget that that it's even there. So that's kind of why we implore people to, let's check it. Your credit score will rebound in, a week to 2 weeks. It's really only a minimal hit anyways. And it's imperative so that you can go out shopping with your realtor.
Stephen, do you want to bring up our site quickly? I'll show you. This is kind of a soft look at what the bank would be offering you. So this is just our beautiful website here. If you go to resources and then mortgage calculators. So this is kind of a 5-question. So if you go to the first one, I'm just getting started. How much can I afford? So, let's put in here, let's do exactly what I just said. So let's put, 80, let's just put 90,000 as a household income. So this is, 90,000. And then how much have you saved for down payment? Let's say, $50,000, been saving for a few years. Then you go next. How much do you spend on monthly loan repayments? Well, we do have that car loan, honey, $280, you put that in. Great. Next. And then what's your total amount of credit card debt? Oh, well, I have a credit card. You have a credit card. We're talking, let's say $5,000. Great. And then how good's your credit bureau? I mean, that's such a general question, but let's just say good. I'm good. Let's get your results. There you go. So that's essentially what the bank does for pre-approval. There you go. 438. Start shopping. So I mean, this is something we have as a tool, just so that people actually can see ballpark what they have. But then you can see right below we have the get pre-approved, like a true pre-approval, where we'll dig a bit more into the weeds. But that's pretty much like those are the questions that the bank's asking. That's
and that 238 is actually biweekly and not and not monthly. And credit is actually in the trash. And spouse has a credit card the other one doesn't know about for shopping or what. The statement that they run to the mailbox to hide from their spouse every month.
Well, and it's hilarious because sometimes I'll talk to people and they'll be like, "I'm pre-approved for $800,000." And I'll be like, okay, great. I'm like, well, who are you working with? Can you put me in touch? Well, no, that's just the average I've got from a few of the sites. I've just been putting in my information. I'm like, okay, well, that's great. I go, but you need to get an approval. Well, I don't want to get my credit bureau hit and everything. I'm like, well, I can't work with you until you go talk to somebody,
mm-hmm.
And there's a lot of people. I wanted to ask you guys, like, what percentage of the people who do use your mortgage calculator there do you talk with who won't submit all their information, or that you just don't hear back from at all?
Paul, you'd maybe have that metric. I'm not sure.
Yeah. Do you know?
The people that complete, I would say, I mean, most people that actually go, like the people that just do that questionnaire that we just said that spit out that number, we don't actually see that. Like that's just a free calculator.
Because it's not a lead.
If they hit the get pre-approved, then those people are actually, they're going through the pre-approval process. So at that point, we're talking to them. We're figuring out, we're going to be setting up a call after that. This is assuming they just went there blindly and started filling out numbers.
Right.
But most people, we're going to have that initial conversation first, and then we'll kind of direct them to the right channels to properly get their information. But to Dave's point about credit, I mean, the difference between as well, like working with us over the bank, is that the bank, if you go to 3 different banks, or all 3 of them are checking your credit. And that could very easily negatively affect your credit report, right? Because then you're deemed a credit seeker. You're just going anywhere you can to try to get credit, and that definitely hurts your credit bureau. Whereas on our end, we do one credit check, and it's kind of a blanket check, and all 30 of our lenders will accept it. So it's not like we're having to constantly hit your credit over and over again. It's a one and done, and it's just
that's definitely a conversation that I have with a lot of people, and no one knows that.
And to your point, Greg, like somebody wanting to go out shopping for, it doesn't matter what the purchase price is, 200,000, 800,000, 5 million. If you're worried about your credit being checked, why is that? Why are you out shopping for a home if your primary you're that afraid of having your credit checked? If you don't want to be actually prepared to look at that home, you're actually just wasting everyone's time, including your own. Go through that entire process, know what your maximum buying power is, so you can go out shopping with confidence. So, it is a busy market, like we keep talking about. And so you're in the best position possible to put an offer in with Greg with confidence. You know what your numbers are. You know what those mortgage payments are. You might be qualified up to 500,000, but that also might not fit your budget. So we're going to give you that, what the mortgage payments are, and be able to work with you and go through that all the steps through as you're shopping, give you feedback on what, making sure the numbers work and through that entire process. So you're not wasting your own time even. I think it's absurd that somebody would be worried, wanting to go look at an $800,000 home without even having a pre-approval, without worried about having their credit check for a 3-point hit. It's
right.
Yeah. But
Greg, you mentioned you had a few numbers before.
Before we go on. So quickly, last 3 days, 400 new listings across the city. More like city central, a little bit of rural. 65 conditional sales. I thought that number was very impressive. Very happy to see that.
Yeah.
Quite a few price reductions on properties. And the average number that I plugged in today from condos, residential, from 200,000 to 2.5 million. The average is $645K list price, sale price $695K. So, and I mean, that could be, and you know, that's some homes selling for less, that's some homes selling for a lot more. But I think that number, I think that's a good sign that things are slowing down a bit, which is fine with me. I'm seeing it a lot. I think the lower end is going to get hit the worst right now. We're seeing price reductions and some of the lower end properties not selling for as much as they were even 4 weeks ago, especially with more coming on the market. Buyers are being a little bit more particular about what they do. And, you know, I think there's a lot more caution coming into play. And there's also a lot of properties coming out that sellers are thinking that they still have a chance of getting these high numbers when their home isn't perfect, and it's not going to happen. And what I'm doing now, I'm going back to the old days when we used to do pre-inspections on our listings, so that when someone comes to see the house, there's a pre-inspection done. They can buy with confidence. You know, if they want to do a conditional sale and ask for a home inspection, they can, but we're going to have one done. So any of my homes that you see that's older than 5 years for sale, there will be a pre-inspection, and you will most likely find a home warranty as well. Because that's something I think that the market shifts to offer value to our sellers. We have to make sure the home is prepared for the buyers when they come in.
That's a Gregory commitment right there. We need a stamp across the screen.
You got it. You heard it here first. Yeah.
No, I think that's great. Yeah, I spoke with a realtor this week that has a number of listings up, and he was kind of commenting about the interesting conversations. You know, that same sort of conversations you have, Greg, with your listing clients of setting that expectation. The market has shifted. You're not going to see as many showings, and and it's a wide range of areas across the city that he's got a few listings, and I thought it was very poignant. He was talking about, even properties in Orleans and, Dunrobin and this and that, and them not going as quickly as possible, and it being, a little more stressful on the selling agent side, because you're trying to move these properties as well, but you also need to have these realistic set these realistic expectations with your clients as well on the listing side, and vitally important.
The conversations I'm having now with sellers is it's wild. Like, it's very. Like, you have to be very, very clear. And I had a conversation with an agent yesterday. We were saying, like, that listing you got, it's not sold. He's like, I know. And then we were just saying, we're so used to having homes sell in 5 days. Mm-hmm. And that 6th, 7th day, you're just like, what's going on? You're like, what? And we were laughing, going it's ridiculous that we're having this conversation, basically saying, like, it used to be 30 days. 30 days was like an average listing, no problem. Yeah. Right. Yeah. So, but the sellers are expecting it too. So, but now the conversation is like, I got this new listing coming up in Orleans, amazing house, brand new, tons of upgrades. I know what they want. We know what the comps are, but I told him, what do you think? And I said, I'm going to be honest with you. Like, I'm seeing a lot of changes. So do I think your house is worth this much? 100%. Do I think we're going to get it? I think we are. Can I guarantee it? Like, there's no way. I go, if we list at this price, you might just get that price. So then the decision is, do you list a lower in hopes that you're still going to get multiple offers, or do you just list high at market value and let it sit? But we're also seeing a trend where that idea is not working in the lower end. So some properties are listing 100,000 less than what they're truly valued at now. Mm-hmm. And it's back to January prices.
The moral of the story is, listen to Toe Rep, and when Greg says to list, list.
Yeah. It's still a good time to sell. There's buyers out, but you just got to be. You're just going to have to be more patient, I think, unless your home is absolutely exceptional. You got to be
facial for my coffee mug.
Don't let an agent come in, and if someone comes in and tells you you're gonna get this much money, I would go and try to talk to somebody else to get a second opinion. Nothing is guaranteed.
I think that's a great get a second opinion. Same to that guy in the comments on you, that post on the YouTube. Interview realtors, get a second opinion. Don't feel pressured into purchasing any home, and be patient. I mean, the market changes week over week, and speak to somebody that is in the market on a regular basis. But I think should we get into the mood boosts?
You're damn right we should. I got some good ones today. What's that, Greg?
I need a mood boost.
Here we go. Mood boost, boost your juice. We're going. Number one, I got 3 today. Number one, a guy walks up to the widow at her husband's funeral and says, "May I just say one word?" "Sure," the widow replies. "Plethora." The widow says, "Thanks. That means a lot."
Yes.
Number 2, people say they pick their nose, but I feel like I was just born with mine. Last but not least, my personal favorite. Why did the cows return to the marijuana field? It was the pot calling the cattle back.
That's nice.
Those are good. Those are good this week. I like
3
it.
for 3. 3 for 3.
I agree. I agree.
Before I forget, some of the listeners don't know this, but I'm a music person. I do music, and a new song. I put out a new song the other day, and it's pretty hot, and it was on the radio on Live 88.5 in Ottawa the other night.
We must have rights. We can air it. Can we play it?
Yeah, well, you can put the link in the notes so people can click to it. Yeah, it's a track I did years ago and I never finished it, but now it's done. And now that I'm getting a lot of traction with it and people like it, I'm thinking I need to finish more of those unfinished songs.
It honestly might be one of my favorite songs of yours.
Thanks.
Why don't we sign off and then literally play it at the end of the episode?
I like it.
Can we do that?
Oh yeah, for the
Yeah, just as like, we'll leave it for the fans to listen to when we on the outro. And Stephen, is that possible?
Yeah, just keep talking for like a minute while I cue that.
We like to throw
I don't know
curveballs.
if you can do it now. I was just going to say I could send it to him and you can add it to the end of the YouTube release.
It's available.
We'll play it here for the people who want to hang around, and we'll put the link in the description.
Just like Torep, it's available on all streaming platforms: Apple,
correct,
Spotify, whatever it may be,
Amazon, Tidal. Yeah, it was interesting actually. I searched it the other day, and Amazon was the first one that came up. That kind of surprised me. This goes to show you how powerful
Prime Music
is, right? Yeah,
that's pretty wild. The mugs are in, as everyone saw. The mugs are in. So anyone who's still tuning in, if you guys want a mug, let us know.
Yeah,
there's limited supply.
We'll drop them off. We'll drop them off. We're mobile.
Yeah, and I would say let's do this. Anyone who places an order on North Brew, uses the code word podcast, we'll give you 2 mugs. We'll deliver 2 mugs. You can make a nice French press next week. Have a delicious cup of coffee
for you and your spouse.
You and your partner.
Your partner. Yeah. Tore up.
Hanif wants a mug. We'll get you a mug, Hanif. You definitely
I could probably drop one to you today, buddy.
Hanif deserves a couple.
Yeah.
Oh, for sure.
Maybe a whole truckload.
I don't know. If
we have an order of mugs coming for Hanif. He's gonna start a tow rep shop and just be selling tow rep mugs.
How we good on the we tuned up.
So the name of the project is for everyone listening is Pump Action, and the song's called "I'm Gonna Love You." It's basically some crazy rock and roll action here.
First rock and roll track from you.
It is my first true rock and roll track, and everybody's I've been sending it to people. They're like, "Who's the singer?" And I'm like, "It's me singing." They're like, "What?"
It took me a bit. I literally listened to it again this morning, and it took me a bit to like. At first, you actually have to start listening to you singing it. Yeah.
Greg, do you want to do your best radio DJ intro for this song, and then we'll take it to black?
Yeah, and then we can sign off, and we'll just let it run.
All right, ladies and gentlemen, coming up now live on Toll Rep, it's Pump Action with their new hit single, "I'm Gonna Love You."
The Ottawa Real Estate Podcast is brought to you by Referral Mortgages, Blue Panda Realty, and Stephen Hopkins Video. Thanks for tuning in, and please remember to like, comment, share, and most importantly, subscribe. We'd love to hear from you.